Welcome to the CBS Eye on Money Show. It's Tuesday, November 15th. And we, meaning me, Jill Schlesinger, and he, Mark Talercio. Say hi, Mark.
Hola.
We are here to take the mystery out of your financial life. How are you doing today, Mark?
I'm good. Like, what do we have? This is the week before Thanksgiving, so I'm mentally preparing myself for the feast next week that will be happening.
Big changes in the Schlesinger household. Because when I told you what I was doing for Thanksgiving, it was because my mother's partner had died and we were going to take her out to dinner and all that. Now, guess what? My sister is not going to her in-laws in Boston after all. We are shifting all plans and now we are cooking. And so, of course, my sister throws down the gauntlet because my sister can't stand roast turkey. She really dislikes it. So she's like, can we do steak on the grill? I said, I really don't want to do steak on the grill. I really don't. She's like, all right, well then you're going to have to make a small turkey for you and Jackie and mommy, and we're going to do something else. I said, okay, done. So that's what I'm going to do. I just called up my butcher. I ordered the bird that I want. It's smaller. So I'm just going to do a turkey breast. So I don't have to go have that panic of did I not cook it? Is it turkey tartare by mistake? And that's it. I'm going to do our little slice of Thanksgiving, and my sister and her family who really, they just don't like convention. They do everything a little bit different. So that's it. What about a stuffing? What's your stuffing preference?
Like your sister, I'm not a big turkey guy. I actually I'm going to do the confit turkey legs, but I like a ham.
Oh, are you doing a ham also?
Yeah.
Oh my God. Make me some extra. I do love ham. I'm like the Jewish girl who loves ham. I love it. Jackie's mother used to make a fantastic meat stuffing, which is a meal in of itself. And also, by the way, when Jackie's mom did it, there was always a pasta course before we ever got to turkey. So that was great.
We have the antipasta. I'll make the antipasta. And, we'll have Amanda's parents with us. So turkey is not big in China. So they really are not fans of turkey.
I think that in general, when we look at Thanksgiving and we get ourselves all freaked out, you just have to remember it is a tough meal to put together. It is. Take the pressure off, try to do as much in advance. If you have to order and get something, I'm sorry, food costs are up so much, but then skimp on something else. Don't get 15 desserts. People go nuts with desserts also. You don't need 5 pies. You could do a pie, okay, and get a few cookies and call it a night. All right, or make yourself crazy. Do what you want, as I turn him to my mother. Let's take the mystery out of someone's financial life. Let's talk to Claire from New Jersey. Claire, are you hosting Thanksgiving?
Yes, I am.
Tell us about it.
Well, I have to admit we're getting catering from one of our local cafes, although we will be supplementing with some homemade mac and cheese and stuff like that.
How many people?
There will be about 10 of us.
Oh, that's reasonable. That's a reasonable number. Absolutely. Okay, what brings you to us besides Thanksgiving prep?
So I had a question about long-term disability insurance. In short, my husband and I are working with a financial advisor. There was a period of time when I was between jobs last year, and I was thinking about hanging my own shingle and starting my own business. I subsequently found, a good job with a W-2 paycheck. And
Great.
My husband also has, he's a W-2 employee as well. We've kind of still been revisiting this insurance situation, though. I have a life insurance policy. My husband and I do not have any kids. We may or may not have kids in the future, unclear. But, our advisor has kind of been saying, well, life insurance is important, but you should also consider a disability insurance policy, particularly if you decide to go out on your own. But if not, you would, be wise to have a supplement to your employer provided policy as well. And
Are you trying to put me into a bad mood right now? You seemed so nice when we were talking about Thanksgiving. Are you actively trying to get me angry right now? Okay, hold on. Let's just go back a second. You're both W-2 employees. How old are you guys?
36 and 34.
And you said you have life insurance, but he does not?
He does not. Unfortunately, he was denied because of a prior medical condition, which, the doctors have said is not really cause for concern in the long run, but the
But it just puts
underwriters,
them out of the box of like, oh, we know how to deal with this. And then the insurance company, just the path of least resistance is let's deny them, right?
exactly. And so that happened about a year and a half ago. And, supposedly they can revisit this decision in another year and a half. So
Is
we'll
he
see.
36 and you're 34? Or is it the other way around?
The other way around.
Okay. How much life insurance do you have on yourself?
I have $1 million policy plus whatever I get through work, which is about 100,000.
Okay. And how much do you guys each earn?
Aside from bonuses, we earn approximately 400,000 annually together.
Nice. Sweet. And I presume you're maxing out your retirement accounts?
Yes.
And what's not like the hope, but what's the general bonus been? Not, again, not the best, not the worst. What's it been about? If you could smooth it out for me.
In the grand scheme of things, it's not much. It's like maybe 15,000.
Okay. Got it. And you guys get your benefits separately or through one or other of your employers?
Health benefits we get through his employer. Each of us has life insurance and disability insurance through our respective employers.
Okay. Is there a disparity between the two of you in terms of how much you make? Are you making 100 and he's making 300, or is it about the same?
It's about the same.
Can he buy more life insurance through his employer?
Yes, he can. And I've told him to work on that.
Oh, yeah. That might be a way to get him with the proper amount of insurance without getting him rated, or, you know what I mean? Like
Yes.
that's the nice part of being part of a group. Okay. So now that you had the idea about self-employment, what caused you to choose going the more traditional, I'll work for the man, the woman, the person route?
I found what seemed to be a great fit. And I also, if I had opened my own business, it would have required going back to school for probably a year or so. I had already finished paying off, we have no student debt anymore. And the idea of doing that again kind of
Bummed you out.
yes, exactly.
Okay. I hear you. Okay. So just to be clear, you got plenty of cash flow. Let's talk about the assets that you've accumulated. How much money do you have in retirement accounts?
It's well into probably $500,000.
Great. And are you guys using traditional or Roth right now?
I had some traditional contributions before I saw the light and started switching everything to Roth. So right now it's all Roth for both of us.
Great. I mean, it's like, I feel like the new religion is going to be called like the religion of Mark. That's what it's going to be. He's the disciple. You and Ed Slott. It's like Ed Slott is your Messiah, Mark.
He leads, I follow.
Okay, got it. Okay. How about non-retirement money? How much do you have socked away?
Probably about 100K.
Is that in brokerage or is that just straight up savings?
It's a mix of both.
Okay. So you have an emergency reserve fund in there. And do you guys own or do you rent?
We just purchased a condo earlier this year.
Oh, congratulations. How much did you buy it for and what kind of mortgage did you get?
We were fortunate to lock in a rate around 3.3, and we paid $1.1 million for it.
How much of that did you finance? Did you put 20% down or more down?
We put 20% down.
So that's quite a little expense there, but you got a great mortgage interest rate, and you're maxing out your retirement accounts. You're paying for the new costs of this place. Mark, do you have other questions before we go into this disability situation?
I was just wondering, with the new expense of the condo, and how's your cash flow on a monthly basis? What's left over each month?
Well, we're paying less in our mortgage payment than we would be if we were still renting.
I mean, welcome to the New York City area. You buy a place for $1.1 million, and it's cheaper than what you were paying in rent.
Yes, exactly.
God, it is unbelievable. But you know what? You made the decision at the right time. You saved the money, which is, I mean, actually kind of the amazing thing that you were, were you always thinking about buying, or were you like, wow, we have a slug of cash, let's do something with it? Like, how did you get off the dime and do it?
The latter, Jill. It was the latter. It was, our landlord was raising the rent, and it was not even a very nice apartment. And, we said, hey, let's start looking at some places. And within a matter of weeks, we had an offer accepted on this.
Oh my God, that's amazing. So you had money. So what you're telling me is that in that non-retirement account, there was $300,000 in there, right?
Yes.
Oh my God, that's amazing. So thank God, by the way, that you were such good savers. You really have no idea about kids. Give me the probability. I need to understand this so I can figure out the insurance piece too.
Yeah, 50% chance we'll have one child.
Okay. So if you look at the situation, if you look at it just, sort of without any bias, Mark, is there any need that you can see for long-term disability insurance, which is disability insurance that covers you if you cannot perform your job up until the age of your Social Security retirement age? So is there need to buy extra long-term disability insurance for this couple?
As things stand right now, there's no need. They don't need anything beyond what they can get from their employers.
Exactly. And which is probably they cover 60% of what you earn. I don't know if you contribute to that as part of your benefits or they provide it for you, but depending on whether you contribute to it or they contribute to it, that determines whether or not it's taxable income if, God forbid, you were to become disabled and not be able to perform your job. Now, here's another question for you. Your husband's condition, does it make him potentially more vulnerable to a long-term disability?
The doctors have said no.
Okay, good. I mean, there is like sort of an outside case of like, well, if he could qualify for it. And by the way, I'm not exactly sure how he qualifies for that if he can't qualify for life insurance. So that's the first flaw in this idea. The second flaw is this person who is making this recommendation is, I think I used this term recently, Mark, a nincompoop. Because there is no need for you to buy supplemental long-term disability insurance. If anything, there's a problem with the fact that your husband is not actually able to get life insurance.
Right.
But even with that, then the idea of just going through the employer is the path of least resistance. Now, it has been more than a year since he was denied. You can go back and try to get other underwriters, but I would not do anything through this so-called advisor. Now, the $100,000 that's in the non-retirement account, does he help you manage that?
No, my husband mostly just has that sitting in Vanguard funds.
Great. Perfect. Okay. So here's my recommendation. Say goodbye to this guy. Because I don't like this advice. If he were the type of advisor, which he calls himself, which is funny, and he was really worried about putting your needs first, well, then what I think he would have done is walk you through the exact same set of questions that I just asked you and said, well, let's just do this through your employer. It is true that having disability insurance, if you're self-employed, is a very smart thing to do, but you are not self-employed. Now, if you were to become self-employed and there really was a game plan that you're going to move towards that, sure, maybe. But, what you can also do is once you get your cash flow settled, getting your house purchased and paying for the mortgage and just getting everything done, once you've now put in all this money into retirement, you can just start to restock the non-retirement account at Vanguard. And that can be your supplemental retirement account so that if, God forbid, something happened to either of you, there was some money set aside. I do think it would be very good for you to see if your husband can get more coverage through work. And maybe, and I'm not like saying a definite, but maybe if he can't, then maybe I would go through and try to find another provider. If you check back with us after you talk to your husband's employer about, and by the way, can you buy more insurance through your employer or not?
Yes, and I've done so.
Can you buy it for him?
Yes, and I have, something like $50,000 for him.
Okay. So let's see if he can go back and pump up that life insurance. Listen, gang, if you are like Claire in that you have like a diagnosis or something it really isn't life-threatening or that it requires a bigger explanation, Once you get denied for coverage, you usually have to wait a year because then they ask a specific question on your insurance application, which says, have you ever been denied or have you been denied coverage within the last 12 months? And they'll ask that question for this very reason. But if you could get private coverage with an explanation, or if you find that, you want to go through an insurance salesperson who maybe deals with somewhat more difficult cases, then, let's find that out. But if you can get more through work, if he can all of a sudden get more coverage through work and it's affordable, and even if it's not affordable, just get it. Just get it. Okay. So do you guys have your estate documents done?
We do, yes.
Well, that's good. How'd you get this insurance hack?
The advisor?
Did you like that? Yeah. The so-called advisor, as I like to call him.
Some of my, here's a kicker.
Oh, no. You're going to tell me that this is your parents?
No.
Okay.
I do, however, have, from prior jobs, I have an IRA and a Roth IRA account with this person.
Oh, we're done with this. Goodbye, Charlie. How much money's in there?
As of today, roughly $130.
Bye. We're going to Vanguard. Your husband's the new manager of that account. You feel okay with that? Oh my God, you're wimping out on me. I hear it, Mark. Do you hear this?
Go to Vanguard Digital Advisor then.
Yeah, that's a good idea. Go to Vanguard Digital Advisor. That's good. That's a great idea. Or Vanguard Personal Service Advisor. You can get advice for 30 basis points. You know how much you pay this yuckster or not?
Well, we're trying to decide what to do with like a chunk of cash that we have, and
not give it to this person is the number one recommendation I can start with. How much of a chunk? Where was the chunk? You told me I had $100,000 in this non-retire. You've hidden money from me, by the way.
We got a family gift, which is in the neighborhood of $300,000.
What?
I know.
What? Wait a minute. Where did that come from? A trust? Was there a distribution?
Well, it came from cash from some very generous parents.
Here's the deal. Just stop. Do not give this guy the money. Please don't. Is your husband comfortable? I mean, your husband did have $300,000 in this account previously. So are you not comfortable with that, or and he's not listening? Are you okay with him doing it, or do you really want some advice?
Well, I mean, I would like to be,
I'm going to refer you to somebody who is a fee-only advisor, who's a New Jersey-based fee-only advisor, who's lovely. I don't even think you need this person. I got to be honest with you. I don't. I mean, and we could talk more about this off air, because if you're feeling a little bit like, look, I love my husband, but I really think we need more long-term financial planning and advice, that's one thing. And if you're like, yeah, maybe someone knows better, nobody really does know better. And, it could be that you just do the Vanguard Personal Service Advisor, and that could be enough for you right now. But if there's a ton of money that's likely to come toward to you guys in the coming years and you want to establish a relationship with somebody, I totally get that. So we'll give you some options, okay? I am crystal clear that insurance guy is not the person for you. That I'm 100% sure of.
I will say another thing is, this person has tried in the past to get us to buy whole life insurance, and
bing, 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 bing.
Yeah.
Okay, we're done. I will tell you how to get rid of this person in a nice way. Everyone listening, here's how you do it. You write a beautiful email thanking this person for your advice and your time. We've decided to go into a different direction. I'm very grateful for the service that you have provided. Please do not contact me regarding this matter. I wish you the very best, Claire. XO Claire smiley face. Which is, you're fired and do not call me. Because if you don't say, please do not contact me, this dude's going to chase you down. Because insurance salespeople are like very, very well-trained dogs. They know exactly how to get you to change your mind back. All right?
Thank you.
All right. Any other questions before we wrap it up, and we'll talk to you on the other side after we're off the air?
No, I think that's it.
Okay, if you, like Claire, have been told that insurance is the answer to any financial question that arises, you may want to talk to us. Mark and I would be delighted to work it through with you. Just go to jillonmoney.com, click the Contact Us button, and there you will see a form. It will pop up. You'll complete the form. At the end of the form, it says, would you be willing to come on the air live? If you check the box, you can actually join us. And it's great because, I was just looking at Claire's initial email because there was an email and we weren't going to have you on the air. And I was like, oh, there's a lot more questions. I'm so glad that she joined us because there were many follow-up questions that I don't think we would have gotten to if we just read this as an email. So thanks to Claire for agreeing to let us cajole her to come on the air. I used to cajole people to let me manage their money. Now I cajole them to come on the air with us. You can follow us wherever you find your favorite podcast. Mark Talercio is the co-host and executive producer. We're distributed by Paramount Global, and we drop our episodes on Tuesdays and Thursdays. If you would not mind, could you please leave us a rating and review on Apple? Lift someone up today. Curiosity, compassion, community. Thanks for listening. We'll talk to you on Thursday.